start. So good morning, everybody. My name is Claudia Shah. I work with the Small Business Development Center, SBDC. Ours is called Centro de Negocios. We specialize in Spanish-speaking entrepreneurs and small business owners. And we offer free advising for small business owners who wants to start a business or who are already in business. The free advising includes social media marketing, access to capital, government contracting, import-export, licenses, permits, anything that it has to be with your business, including HR. So reach out to us. I'll be putting in the chat our phone number and our information. The other thing that we also help with is with webinars. And we have a lot of webinars. You can attend any webinar with any SBDC. You can only be client with one center, but you can go to all the webinars that you want. And sometimes we do it ourselves, or sometimes we have great partners. Like today, we're going to have Operation Hope. Operation Hope has been an awesome partner to us. They have great products and services for our clients and for entrepreneurs in general. And everything is also like free of cost. So I will just let Isabel Duran, who is going to be our presenter today from Operation Hope, to introduce herself, to introduce the organization. And with further ado, thank you, Isabel, for being here today. And you're in mute.
Forget. I just want to talk and I forget. So thank you very much, Claudia, for inviting me. I always enjoy your organization, your services. I think we work like a partnership really well. I am a credit counselor for Operation Hope. Operation Hope is a nonprofit. And what I'm going to do today is explain a little bit about budgeting and how to save money and credit, how credit works. So I am going to go ahead and start. Is that okay, Claudia?
Yes, please, go ahead.
Okay, great. So a little bit about Operation Hope. We've been around for more than 29 years. We started not too long after the 1992 civil unrest, or as we call the riots. And it started by John Hope Bryant. And what he found was that people who had an investment in themselves were not the ones looting. People who had nothing to lose were the ones who were, looting. And what we found is that there was a lack of information. There was a lack of financial literacy training. There was a lack of financing, kind of banking information. There was a lot of things missing in minority communities, and this is what we wanted to provide: information, education to all the folks in the community so they can have an investment in themselves. So he started with doing financial literacy. We go out and we give you information on how to handle money, how to do budgeting, and many other programs that we have. Right now, we've expanded a lot. It's just amazing. We are all over the United States with different branches. We provide workshops in credit and money management counseling, home ownership. We have small business training, entrepreneurial training. We help you start a small business, help you with a business plan, and we work in conjunction with a small business development center. And in some locations, we have the ability to offer a cyber cafe. And we have a youth program to help people who are in schools. When we're invited, we go into the schools with vetted volunteers to do financial literacy, so we could expose young children to what money is, how to handle money. And we also provide we give them a look at what business is possible. Maybe we can give them an idea to start their own business now, so when they graduate in 20 years, they already have their jobs. So it's pretty exciting what we offer. So I'll be talking about budgeting, which means a plan to how to spend your money, or a system on how to conserve your money, pay your needs, save for your wants. We're going to help you understand what a credit score is and why do we need a credit score. I'll go briefly over your rights as a consumer and some other services that we provide, uh, helping you improve your credit score. Okay. So the purpose of the budget. So I remember in high school, I didn't know what a budget was. What is a budget? And my mother had to come back and say, honey, remember I told you, you got to save money. You can't spend money if you don't know if you have money. So it took me a while. And a budget is a, a list of items that I have to pay. So as I graduated, I found out that I have to make a car payment because my parents helped me buy a very old car, but it got me to work. And they go, okay, so now you have payments for your car. Remember, you have insurance and you have gas. So you make a list of what you're spending. And then as you start working, you have some money, you go to what you owe first or what you have to pay on needs. So basically, we understand for everyone, we need to have shelter, we need to have food, we need to have source of transportation and communications. Those are our basic needs. Of course, there's other needs if you have a larger family, if you have family in school. So there's different needs, but you need to understand that you need to know what it is that you have to pay, and you need to know how much you have to make those payments. So we call this system, we call this a list, we call this a program, but it's a budget telling you how much you have and what you have to spend on. So what we want to do is create a plan. So, are you looking to save money to buy a car? Are you looking to save money to go to school? Are you trying to save money to go on vacation? And a lot of folks are saving money to buy a house. So, you need to have a plan. So, remember with the budget, don't ever forget the budget. You got to cover housing, you got to cover food, transportation, and communication. With what you have, cover that, and then start saving the extra that you have. So, again, what is your budget? And then choose how much of your income you go to the budget, and then start saving, create a plan. I know sometimes it's tedious, but let me tell you, you put it on the refrigerator and you put a picture of your car and then how much you want, if you look at it, it starts working in your mind that you can do this. So a budget would also help you pay off some credit. So sometimes you got into an issue where you have to pay this, pay that. How can we help you save money so you could start paying off debt? And paying off debt is a really good idea because then whatever you make is extra money in your hand as opposed to all the money has to go into paying debt. So it's very important to even start saving $1 a week. You just got to do that. Put it aside. There's so many systems. I know I remember in one class, this lady told me that she would put money in a plastic bag and then she put in a jar of water and she would freeze it in the freezer. I know that's a little extreme. So that way it would be too hard to get the money out because then she would have to unfreeze it and all that. So there's all kinds of things to help you save money. The best bet is to put it in the bag. It's safer there than the freezer. So Operation Hope is really asking all the employees to really motivate, to really ask, you have to save. Savings is not an option. Again, try to squeeze $1 off every week or every day and try to save it. We need to save for emergencies. We've had a few emergencies over the last 2 years, and I don't know how things are going to happen in the future, but it's always good to have an emergency bank account, emergency savings, or something happens that you have to fix. So many times the plumbing goes out and you need to fix it right away. You need to fix that with cash, because sometimes the plumbers don't carry the little machine to get the credit card. If you have a car, I'm sure all of you have experienced a flat tire. How do you fix it right away? You need to have some cash to get to buy that tire to pay for the mechanic. I don't know how to change a tire. I can't even pick up the tire. So, I always have a little bit of cash in my pocket. So, again, savings for emergencies, savings for the goal of what you want. So, budgeting exercise. So we know what we have to pay. So here you have pictures of, you budget for savings, you budget to pay off credit, you budget to make sure you pay your rent on time, pay your utilities on time. And if you have any extra and save money, maybe you could buy something for yourself so you can, reward yourself for being so disciplined. So it is an exercise, and it's a constant exercise. You need to, it's also empowering to know this is how much I have and this is what I have to spend. You're in control. That's what you want to do. Each person's budget is different, so remember to customize it to your own lifestyle. Okay. So some people may use credit cards to help out. I suggest don't use credit cards to supplement your income, only to use it because there's so many uses for a credit report. And a credit report is what landlords use to qualify you to rent an apartment. Credit reports are used by employers to see if you have no problems, we can employ you. And then I know for a lot of government agencies and police types of jobs, securities, they always look at your credit report, make sure there's no issues. So who creates these credit reports? Well, there's three major companies that actually produce the report, print it out, and has all the information about you. It's Equifax, Experian, and TransUnion. They're the major companies. There are now three what we call third-party companies that can provide you with a free credit report, such as Credit Karma, Credit Sesame. A couple of other credit cards can offer you a credit report with a score, and they say it's free. They get those credit reports from these three credit bureaus. And they don't charge you for the credit score because they use a different scoring system. But the major banks who offer home loans, who offer auto loans, a lot of stores use the FICO score that's used by these three major companies. So these are the major companies that produce your report. How do they produce your report? They get the information from the creditors. And the creditors send your information when you apply for credit. You're giving authorization to look at your report. They send that information to the three credit bureaus so they can get a report with a score. Now, the score, it was created by another company by the name of FICO, F like Frank, ICO. They created this formula to put a score to activity that pertains to credit. And this is really good for the creditors, so they can take a very little time to assess your information and your score in order to say, yes, you have credit, or no, we're not going to offer you right now. You need to kind of fix something. So we call it the FICO score. And anything over 650 is a good score. Anything under 600, there's some issues that we need to fix so you can get above it and be able to qualify for credit. So another third agency that offers you a credit report is called the annualcreditreport.com. This started about 12 years ago because a lot of consumers were complaining that they had to pay for credit. And then when they wanted their own score, that you had to pay more. Why do I have to pay for my own information? So the government created this website. You go on it, you can get one free credit report per agency per year. But because of the pandemic, they actually changed it to now you can get a free credit report once a week. This is a good way of monitoring what is being reported on your credit report. The only thing with annualcreditreport.com is they don't offer you a score, okay? Can you see the slides?
Perfect.
Okay, all right. Okay, we don't know the formula to FICO score because FICO does not want to share it. But we know there's 5 parts to it, and this is really important. The biggest part is payment history, which is 35% of your score. That means that when you apply for a credit card, you get a credit limit, and you get a plastic card and you charge it. And then a few weeks later, you get the bill, and the bill will say, you charge so much, on this particular day or dates. And your payment due date is, let's say, the 15th of the month. And it says, and many times these credit companies will tell you minimum payment. That's a minimum payment to keep you on time. So if you pay on the 15th and you make the minimum payment, great, your score goes up. If you don't pay on the 15th, the company that gave you that credit will charge you a late fee. That's extra money you didn't have to pay out. But if you pay 30 days late, this is when they take points off your score. Excuse me. So for a store account like Target, Walmart, Home Depot, those are easy credit locations. They will take 5 to 10 points off your score. If it's a Visa or a MasterCard, they're going to take off, and you're late 30 days, they're going to take off 10 to 15 points. If you have a car payment and you're 30 days late, that's 20 points off your score. And if with a mortgage, which is the highest category of credit, you could lose 50 to 65 points for being 30 days late. So the lesson here is to make sure that you plan your charges. You plan if you're going to use the credit card, what will the payments be so you can afford to pay it on time. So this is very important. This is also the section where if you don't pay after 30 days, 60 days, 90 days, many stores will send your account to collections, and that's where it shows up here. So the idea is to never get there. The other part of the score is debt utilization, how you use your debt. So there's 2 kinds of credit. Here in the orange, they like to see how you handle diversity, which is credit, lines of credit, credit cards. And the other kind is a loan with fixed payments, whether it's a 5-year loan, 20-year loan, like a car payment, like a student loan, like a home mortgage. You have fixed payments. So going to the credit card lines of credit, they give you a credit limit when they approve you. So let's say you go to Target and you get approved for $500. So if I charge up $500 all at once, my credit's going to go down. And the reason they do that is because once you use the whole credit limit, it looks like you're burdened, like you're heavy with debt. But if you only use 50% of that, your score will go up. So the strategy here is if you're building up your credit score, your credit report, is yes, take out a credit card, use very little or use half of it. And then when you get the bill, pay it down, then your scores will go up, okay? When you have a credit card and you're ready to pay it off, your score is gonna go up, but do not close it. If you close a credit card account, your credit limit erases. So whatever credit limit you had left needs to balance the other debt. So hopefully that, you don't close the credit limit. That way it's higher than your balance. And that's what you need to keep always aware of to make sure that your points still go up. The other part of your credit score is the amount of time you've had credit history. If you're just starting out, you have a few, they'll give you a few points. After a year, after 5 years, they give you more points for your credit score. Again, account diversity, they like to see how you handle the two types of credit. And the yellow is the only negative part of this credit score. Every time you apply for credit, whether it's a store, gas station, bank, finance company, and you apply for credit and they pull your credit report, we call it a hard pull because they're going to look and see if they can give you credit. Every time they do that, or every time you allow someone to do that, it's 2 to 4 points they take off your score. Okay, so be careful when you're applying here, applying that. I made that mistake a long time ago when I didn't know all this stuff. I went to the mall, and at the mall, when it's every store you go to, they want to give you 10, 15% discount if you apply for credit. I didn't know any better. So, after 5 stores, I left the mall and came home, and in a few days, I got a mail that my score went down 40 points. And I didn't get to counseling. So this is how I learned how this works. Just applying for credit is 2 to 4 points. And sometimes when you're looking for car loans, I see this in a lot of folks' credit reports that I try to help improve when I do counseling. I've seen that they've gone to a dealer, and next thing you know, there's 5 or 6 inquiries in your credit report, and that's 2 to 4 points they've taken off just to look at credit. So plan out how you're going to use and apply for credit, and plan out how you're going to pay for that. So this is more or less how the score is created. So when you need to improve your score, pay down the debt, keep the credit limit up, pay on time. Very simple. Okay. Any questions on that? This gives you more detail on the types of, types of credit. So we have revolving, which is credit cards and home equity lines of credit. And we have installment, mortgage, student loans, car payments, personal loans. So that's basically the 2 kinds of credit that you can get. And the types of cards you can get. A credit card. A credit card gives you an approval to borrow money on this card for a certain amount. And that's what we were talking about, the point system. A debit card is used to take out cash or to pay through your checking account. So anytime you take out cash from the ATM, it comes out of your checking account. When I go to the store and buy food, I use a debit card that comes out of my checking account. ATM cards are just to take out cash just at a particular bank branch. Those are the kinds of cards that when you first apply for credit or you open up a checking account or a savings account, they'll give you the ATM, and it's just for that bank branch. Prepaid cards are where you can go to certain stores that sell prepaid cards. You buy them for the amount that you want in that card. So you can buy a card for $50, and that's like having a credit card that has $50 in it. You can use it, but it does not report to the credit bureaus. So you cannot create credit history or improve credit history with a prepaid credit card. However, some people don't want to get credit cards, and I totally understand. They buy the prepaid card so they can go online and buy anything online with their prepaid credit cards. Okay.
Isabel, I have a question.
Yes, ma'am.
You mentioned 3 things: keep pay off debt, keep limit up in the previous slide. And what was the third thing?
Pay on time.
Oh, pay on time. Thank you.
Yeah, it's so much extra money going out unnecessarily when you pay late fees and you pay interest. So on credit cards, you have to understand. I was in shock when I got my first Target credit card because they were charging me 27% interest rate. And that's charged on the balance you leave on the bill. You know, if I pay the minimum payment of $25 and I leave a balance of 50, they add the interest on the 50. So I'm paying extra. So I always joke around, that store Target, they remodeled it thanks to my interest. So don't throw out the money, just keep the money to yourself, but pay on time. One of the things that the credit bureaus have offered, this started quite a while ago. There were so many complaints that people still have some negative credit information on their credit reports, and it was hard to get them beyond that so they can get, buy a house or buy a car. So the credit bureaus created this system where after 7 years, they will remove your negative information. And this is to help you have a better looking credit report so you can get to the next step of either buying a car or buying a house. But I have to warn you, it does not mean you do not owe what you owe, okay? So if you have collections, if you have charge-offs, which are accounts that the company takes off their books, but now they've sold the account to a collection agency, you still owe it if you haven't paid it off, okay? But after 7 years, it will come off your credit report, so your credit won't look so hard, or so the score won't look so low. So after 7 years, collection accounts and charge-offs. Now, even if you paid a collection account and it still shows up, it will still stay on your credit report for 7 years, and then the credit bureau drops it, as they say. General civil judgments. So if I didn't pay my Target bill and I, didn't pay, my score went down, they closed my account, and it goes to collections and it doesn't work. So now they give it back to the store. The store now sends me to court to talk to the judge, and so they can find a way how I can pay them off. So if I don't show up to court because they send you a summons, I lose the case, they win, and they can possibly put a lien on my car, on my property, or they can ask the judge to put a garnishment on my check if I'm working. So try not to get there, all right? I know sometimes life is hard, but try not to get there. City, county, state, and federal tax liens. So if you do tax returns, if you buy something through the state or you have to pay the state, you really need to pay these agencies. If not, they do everything in their best to call you to say, no, I'm sorry, they don't call you. That's a scam. They write letters, okay? The city, county, state, and federal government, if you owe them, they will send you letters for years. And finally, they give you the final warning, and then they will put a lien on you. So please don't get even close to it. It gets too expensive. But they're willing to help you. They're willing to take payment arrangements. So please don't go there. However, they will come off your credit report in 7 years, but they will remember you, okay? Bankruptcies are legal proceedings. So there's Chapter 7, Chapter 13. I cannot advise you about bankruptcy. I can explain what it is. Chapter 7 is where, we've just had the pandemic. We've lost our jobs. We have no way of paying our debts. And so, I can't pay. So what you need to do, the process is to go to a bankruptcy lawyer, They will give you counseling and explain what's going to happen if you file for bankruptcy. The lawyer will file in court that you are applying for bankruptcy, and the process is the judge will send letters to the creditors that you're filing for bankruptcy, and if the judge approves, then your debt is eliminated from your credit report, and so you can start over again. But I cannot advise you. I can just explain what it is. Chapter 13 is, let's say you have this debt, maybe you working part-time, you again go to the bankruptcy lawyer and say, look, I want to pay, but I can't pay the whole amount because I have now a part-time job. I can pay $10 on those 5 accounts. So they submit this to the judge, and if they approve it, they put you on a payment plan where you pay the court and the court pays the debt. It's usually 3 to 5 year program. Okay, that will come out on your credit report. Chapter 7 stays on your credit report for 10 years, and Chapter 13 will come off usually 7 years. It usually comes off after 7 years. So just be aware of that. So this is a sample TransUnion credit report. I'm able to pull your TransUnion credit report as a soft pull. Remember, I don't take off points. I'm not offering credit. I'm just offering credit counseling. And I explained to the folks that how to read a TransUnion credit report. So on the top right, I enter the client's name and address, and then that comes out with a credit report. And the information that's circled is the information that's on the credit application. So Elizabeth Duncan applied for credit, and she has 2 names. I think she got divorced or got married. And she's had credit for quite a while with TransUnion, and she's moved from Chicago to Oakland, California, and back to Chicago. So maybe she got married in Oakland and then got divorced, came back in Chicago. I can tell all kinds of stories. However, she had 2 jobs. She worked for the ABC Hotels and then Acme Systems for Oakland. So this is how you read your credit report. A lot of information based on what you do with your credit. It says here that a Vantage score. So this score comes from Credit Karma, and TransUnion is what we call the FICO score. But this particular model is a bankruptcy model. So I just want to let you know too that there's several scoring systems. So sometimes you'll see a score on one report and a score on another. What's the difference? Sometimes there's a little bit of different systems that they use. For example, the lenders who lend money for buying a home, mortgage financiers, banks, they use a mortgage system of scoring. Car dealers have a scoring system for, cars. Let's see, I use the TransUnion, the FICO version 8 for counseling, and the Credit Karma uses the Vantage scoring system. I think there's like 5 other scoring systems. So you just need to be close to the higher number, but just be aware that not all stores or companies subscribe to the 3 bureaus, Equifax, TransUnion, and Equifax and Experian. The 3 companies, sometimes they only subscribe to 2. So on one report, you may see an account that's not reported on another. So just be aware of that. So we find out her score is low, and the reason why she's had some collections, and it looks like she had a bankruptcy in the past, okay? And then here she has 2 revolving accounts, which are credit cards. And you see her credit limit, 18,200. Her balance is 5,000. So she's that's good, because she has high credit limit, low balance. Her installments, unfortunately, that's where she had some lates because you could see the past due amounts. And she has a mortgage that looks like it's perfect. So a lot of things can happen. Here it is, Chapter 7 bankruptcy. She filed and she got her liabilities of 14,000 erased. She even paid a civil judgment. So this is where they took her to court and she paid. Okay, her original balance was 3,000. And she has some collections. So, you know, there's a lot of things that happen in life that kind of goes against you. So here we're looking at trades, regular accounts. She has an ABC account. There's some lates. She had a store credit card. She's paying on time. And now she has a mortgage, and that's perfect. Okay. So she's trying to catch up. She's trying to make it look good. And then at the end of the credit report, this is where the inquiries, excuse me, when she applies for credit, they look at her credit report and it's an inquiry. Okay. So that's a sample. Do we have time for some rights, Claudia?
Somewhat?
To explain your consumer rights?
Oh, yes, yes, we do. We still have another 20 minutes, yes.
Okay, so it's not all upon us to do everything right. We do have some rights. One of them is the Equal Credit Opportunity Act. That means that we have the right to apply for credit. There's no there can be no discrimination based on whether you're a man or a woman, your age, your nationality, your ethnicity, your marital status. I'm trying to think of all the categories. They cannot discriminate on any of that. The only thing they can say that you don't qualify is maybe because you have a low score or your income is not enough. So, but we all have equal credit opportunities to apply for credit. Credit Card Accountability and Responsibility and Disclosure Act. This is about credit cards. So in the past, I remember 15 years ago, if I was late on a credit card, the credit card companies would find out about it and they would raise their interest rate on my other credit cards. They can't do that anymore. If a credit card company is going to raise interest on your credit card, they have to tell you at least 60 days in advance, and they have to tell you why. I haven't seen that in the last 15 years that they raised the interest on the credit card. I haven't seen that at all. I have gotten letters from my credit card companies that they're raising the late fees. Unbelievable. Okay, so be careful. But a credit card accountability means they have to tell you and explain way ahead of time whether they're going to do something or not. So that's for your on your favor. Fair Credit Reporting Act. So you have the right to have an accurate and correct and complete credit report. If I were to pull your credit report and you say, you know, I never lived in Georgia, I never went to this credit card company, then you have the right to dispute it with the credit bureaus and say, I think someone's using my number or you have a big mistake. So you have the right to dispute it and they have to respond to you in 30 days and in 60 days they have to resolve it. Normally they take it off. Fair debt collection practices. This is pertaining to collection agencies. So I don't know if there were, if you have any collections, but before, collection agencies had the reputation of being very mean, very rude, very insulting, and very intimidating. They would just threaten you with death if you didn't pay a collection. They can't do that. The collection agencies have to be professional. They have to tell you why they're calling, and they also have to prove that it's your account. You have the right to say, wait a minute, I don't have a collection with Target. I paid. And they have to prove it and send you information when you request it. Also, they can't yell at you, they can't insult you. You do have the right to report them to the Fair Credit Reporting Act, and there's the Consumer Financial Protection Bureau that you can also report them to. They also have to be not calling before 8 in the morning or after 9 p.m. They have to respect your hours. So that's the Fair Debt Collection Practices. Okay. So settling accounts. So if you have a collection account that you've had for a few years and you really want to get that off your credit report and you have some money that you can pay down, we can call the collection agency and ask for a discount, ask to negotiate, and eventually get a settling account, which means that they have the ability to give you a discount. So if you owe $5,000 on a student loan, or let's say a credit card, they say, well, you know, we're willing to accept $2,000 on a $5,000 debt. We just need it within 30 days. So, and then once you pay them, they will send you a letter that they settled. It will appear on your credit report as settled for less, but you've actually paid off that debt. Okay. So again, document, document, document. And we can help you with that. Disputing inaccurate information. Again, you have the right to have a credit report that's complete and accurate. And so we can help you with that too and show you how to do that. And then the last thing is identity theft. Oh, there's been so many companies hacked. The last one is T-Mobile, you know, amazing. It was a 21-year-old who was able to say they had no security. Anyway, if you feel that there's something on your credit report, or if someone actually stole your purse, your wallet, and your credit cards are gone, and it appears on your credit report, there's a process. The first thing you do is call the credit card companies and your bank accounts and tell them that, you know, they stole my wallet, they stole my purse, or I believe, you know, someone has stolen my information, so they could put a freeze on your accounts. And then what you do is you need to go to the police station and get a report. And to be honest with you, they're not going to investigate these thefts because there's so many. They already have a pre-printed form that they can hand you. They fill it in with your information, that, you know, what there's, you know, and the officer's name and number. And then with that, you could send a copy to your credit card companies to tell them that you've reported it. The first thing you also want to do is put a fraud alert on your credit reports. And you can call the 3 bureaus. They have an 800 number, and you can put a fraud alert. It's free service. And a fraud alert is where if I was able to get your social security number and I went and applied, it's not going to go through because there's a freeze. It's almost a freeze on your social security number. And what's going to happen is they're going to call you and they're going to ask you if you have your credit card with you, because somebody is trying to apply for credit at this Target, my favorite store, in some place. So you're going to say, no, I have my credit. Okay, great. So they totally deny if I'm using your number. They'll totally deny that. So that's the fraud alert. I know some people are really upset and paranoid. There's what we call a credit freeze. And a credit freeze is where they totally have blocked your social security number from everything. Sometimes when you apply for a credit freeze, You do have to create your profile with your username and a PIN number, and you have to remember to say that, because once you want to unfreeze yourself, you're going to have to go in, apply to your username and PIN number. Otherwise, it's going to be really hard to get the freeze off. Okay. And with Credit Karma and Credit Sesame, they offer you credit reports. I like that because you could monitor them quickly. I can also offer you the TransUnion credit report every now and then. It's just important that you know what's being reported, because there's a lot of stuff going on out in the world. Establishing credit. So a lot of times, a lot of folks are ready to fix their credit report. They now have a nice stable job. They can pay down debt, but they want to rebuild their credit. So a lot of times we offer the secured credit card. You can go to your bank, your credit union, and apply for a secured credit card. A secured credit card is where you open up a savings account, let's say $300 savings account, and they'll give you a credit card with a $300 credit limit, and then you start building it up. There's also a website called self.inc. What they do, and it's legit, because I've had some coworkers show us the success of some clients that they were able to build up credit. It's where you apply for a loan. It's sort of like a loan. Let's say $500, and you say, I want to get this in 10 months. So every month you pay $50, and at the end of 10 months, they'll give you back your $500 with interest. And now during that time you've been paying that $50, it's been creating a credit history. So you're rebuilding credit history, and then from there you take it where you want to take it. So that's a lot of information. Any questions?
A lot of information, but awesome and great info. So I'm very needed. Like I was putting also this in the Facebook Live. So yes, we do need this information. People do need to understand how the credit works and how it will affect them when they have their own business too. Because a lot of people is like, they said, okay, maybe because I have my own business, it doesn't matter my credit. Oh yeah, it does matter. So yeah, so people need to understand that. Questions we do have from Jacqueline. I don't know if you read the question, Isabel. It
No,
says okay.
I can't see it because I have the slides. Should it?
That's okay. That's okay. I'll read it for you. So
Okay.
it says, regarding your target credit card, I thought that by law, credit cards couldn't charge more than 24% due to the usury laws.
Oh no, there's some credit cards that are 31%.
Wow.
I know. You need to know what the interest is. You need to ask, or when you get the bill, there's, read the pages. But yeah, it's pretty bad.
Yeah, that's sad. Okay, what about, okay, so I have another question here. It says, I understand that it is possible for one individual who is repairing their credit to be added to someone else's established and in good standing credit card. We did that, but nothing changed. Does the added person need to be issued a card in their name and perform purchases, or how does the addition system work?
Good question. Yes, it works, but you have to be careful who you put on your account. For instance, my husband hates credit. He hates paying, but he needed to have a credit report. So I put him on on one of my credit cards, and he automatically, he did get a card. He doesn't use it. He gives it to me. I hide it, and he now has a really great credit history and a credit report without doing all the work. I've done that to a couple of couples who wanted to buy a house. The wife had really good credit. The husband had good income, no credit. So she put him on 2 of her credit cards, and immediately his score went up 100 points. Unfortunately, he applied for a Starbucks card and he was drinking coffee all the time. So his score went down. We're going, what happened? So we looked at his credit report and he charged up in 1 month $700 at Starbucks. And I go, no, pay it down. So he paid it down. The score went up. And we told him, drink water. I'm just kidding. But we told him, take it easy on charging up, because right now you're preparing yourself to buy a house. The bad part about adding someone to your credit is that sometimes they do it for a son or a daughter to help them out, because you have to be over 18 years of age. And sometimes it didn't work out. They used the card, they charged it up, they didn't make payments. The mother didn't know because she wasn't looking at her credit report. And next thing she knows is that she's being denied. And those are some sad stories that come up.
Oh my God, I'm like, I guess you have so many stories that people can benefit from, because sometimes we don't tend to really understand the magnitude of this. And I know credit has always been the issues, like, if I have paid all my debts and I don't even have a record, why is my credit bad? And it's like, that's the way it works. So, it's tough to understand. So
we always tell people, don't co-sign for anyone, but I understand within family, you want to help. And so you need to understand the responsibility that you're taking on. And hopefully the whoever you're giving help to appreciates what you're doing. But you do have to monitor, and I would not give anyone a credit card.
Yeah. When you do this addition, Jacqueline is asking a little bit further with the question. So when you add somebody to your credit card, but it does not display it like in their credit report, what do you need to do in order for them to get displayed also in their own credit report?
That's interesting.
Because I think maybe because it's a dependent or something, maybe the credit card needs to be under their own name as well, or...
Well, when I called the credit card company to put my husband's name, they asked for the name, they asked for the social security number, the address, and and they send the card in their name. Of course, it's the same address as mine. So and then it didn't take long, but then I was using the card. So my purchase came out on his report as well. He doesn't use the card. It was to create credit history.
I guess Jacqueline needs to talk to the bank and see what happened. And inquire with the bank, Jacqueline, why isn't displaying it? So